Good morning and welcome to our Ashworth Wealth Weekly Market Update. My name is Scott Thomas. I came across an article this last week that I wanted to kind of go through part of it with you today. Just a couple of things I thought stood out to me, a couple of things that were interesting. There's three things I want to kind of talk about today. Number one, oil prices. Where have oil prices been from 2019 until today? How oil prices have affected inflation and how in turn inflation has affected interest rates, because I think those go hand in hand. So I wanted to kind of talk about those, where we think we're at today and where we think we're headed in all those different areas. So the chart I wanted to show today, this is oil prices and where they were. I want to start back in 2019. In 2019, we were right around $60 a barrel, maybe just a little bit under, but right around $60 a barrel. Today, we're at about $82 a barrel. However, in 2020, as you see that big dip, that was the COVID pandemic, and demand around the world just plummeted. And we were down to about $20 a barrel. If you look in 2022 and 2023, we have a spike in oil prices. We got up to about $120 a barrel. That was when the war broke out with Ukraine and Russia, and we've also had tension in the Middle East. So we've had some highs and some lows, but those have greatly affected inflation. Inflation has greatly affected interest rates. So the reason I wanted to bring this up is if you look at the oil prices, minus those two shocks to the system, COVID and the war in Ukraine, if you look at the price of oil from 2019 to where we're at today, we've gone from about $62 a barrel to about $60 a barrel to about $82 a barrel. We've had about a 23% increase in oil prices from 2019 to today. What does that really mean? Well, oil prices have basically gone up about as much as inflation has gone up. So, relatively speaking, everything has gone up, and oil has not really been that much different overall than what the cost of other things have gone up. So the reason that's important is I know it feels like gas is a lot more expensive, oil is a lot more expensive, but relatively speaking, and if you take out the big high and the big low, over those last 4 or 5 years, oil has remained fairly constant. Now, could that change? Absolutely. Could things change over in Ukraine? Could things happen in the Middle East? Could things happen with Iran? Absolutely. And any of those could change that. But as of right now, relatively speaking, oil has gone up about the same amount as inflation. Okay, so I wanted to talk about inflation. We don't have the May numbers out yet, the official number, but as of right now, it's expected that inflation is going to come back at about 0.08% increase for the month of May. What does that mean? Well, that's actually a pretty good number. If it is that number, relatively speaking, that's lower than what it was last month in April. In April, we were expecting about a 0.2% increase. It actually came back higher than that at 0.3%. Because of that, the word is on the street, what most people are thinking, or what most people were thinking last month, is there may not be any rate decreases by the end of the year. If the number comes back this month lower, and it looks like it's going to remain lower, then a lot of people are starting to guess again that we might have a rate cut or two by the end of the year. So the next time the Fed meets will be June 11th and 12th, and it's expected there won't be any rate cuts at all. That they are going to hold things steady. So that's what most people are expecting. However, the possibility of one or two rate cuts towards the end of the year is kind of back on the table. Now, this obviously is a month to month as those inflation numbers come in, and the biggest part of the inflation coming down for this month relative to last month is the decrease in oil prices. So we hope that that continues to happen. So what does that mean? Well, we don't know for sure. There sure is a lot of speculation out there with interest rates, oil prices, political ups and downs. So what we continue to preach to our clients is be diversified, hang in there for the long term. We expect to have ups and downs in the markets over the next, really over the next 6 months with the elections. But we're going to continue to watch interest rates. We're going to continue to watch oil prices. We're going to continue to watch what happens with the Fed, and we'll continue to give you updates on that. If you have any questions or if there's anything else you'd like us to cover in these weekly market updates, please let us know. And again, we really appreciate you joining us for these. Thank you.